All right. All right. All right. All right. Hello. 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 Welcome, everybody, Monday morning to a market open live. I thank you all for joining me today. We are here on a Monday morning. It is February 6th, 2023. I had a very interesting weekend, to say the least. Very interesting, to say the least. And one day I'll talk about that very interesting weekend, but today's not the day. Hello, everyone. Ahad, Scott, Grom Plays, Geis, Cash King, Philip, Felicia. When do we see NYC footage? Very, very soon. I have, if you saw the Palantir Weekly, I showed a little bit of it at the end of that Palantir Weekly on my phone. So you guys will see it soon. Gabe, thank you for being here. Joseph, Troy, Star Buccaneers, you just joined my Patreon this morning. I got a notification that you joined the Patreon. So thank you for supporting the Patreon. It means a lot. Gus, what's up? Yay, no white scarf. Yeah, the white scarf is right here. It will be put on a little bit later today. Morning, everyone. Eeyore was right. Kevin Smith, Jason Reynolds. Thank you all. 69 people on the dot for being here a minute into the live stream. All right. So we've got a lot of stuff going on in the markets. Over the weekend, some really, really interesting stuff happened. The first thing I want to talk about is this Elon Musk tweet to essentially his mental stamina and Twitter. So Wall Street Journal wrote an article about him at the recent Tesla trial, and on Twitter, Elon Musk gives a glimpse into the personal challenges of a billionaire executive. Elon responds, "Last 3 months were extremely tough as I had to save Twitter from bankruptcy while fulfilling essential Tesla and SpaceX duties. Wouldn't wish that pain on anyone. Twitter still has its challenges, but is now trending to break even if we keep at it. Public support is much appreciated." And then he says, "Thank you for supporting Twitter." The idea that Twitter is trending towards break even is incredibly interesting because most analysts have said that Twitter will become bankrupt. And they're not saying it because they hate Elon. I mean, it's just like 2 + 2 = 4, like pure business sense. It's going to be hard for this to make it through. So if Elon's figuring out a way to get the advertisers, get the subscriptions, whatever he has to do to get this to break even, they have $13 billion of debt payments. It seems more exciting than not that Twitter doesn't go bankrupt and he turns it around. Elon has this idea of usually painting a narrative that companies are about to fail and then he brings them from the dead. And that actually was true with Tesla and SpaceX. With Twitter, people thought he was lying, but it is true if you look under the hood. Like, it's not looking good for Twitter. So if he figures out how to make it profitable or break even, that'll be amazing. Chris, what's up? Thank you for being here. Have you reached Gary or do you go there again? We go there again. One day was not enough, so we will be there pretty much all of this week and doing it again. That's it. Gabe says, adding my last puts today. I'm hard-headed. Okay, so Gabe, everyone's been wondering about you in the chat. I've been meaning to reach out to you, but I didn't want to reach out in a patronizing way. I wanted to reach out more so how you're doing type of way. So I'm happy you're in the chat. Okay, so Gabe is still short the market. Sachin, thank you for being here. Miyoko, thank you for being here. Gabe is still short the market. All right. Look, I can't be mad at Gabe being short the market either because, to be honest, this kind of feels a little bit bubbly. However, the Fed has slowed down the rate of interest, the rate of interest rate hikes, and let's see February CPI. If we get February CPI at what 5.7%, 5.8%, even 5.6%, I don't think the market's going to necessarily be mad at that. So Gabe says, "Don't get cocky at bulls." That's all I'm gonna say. So Gabe, this is kind of like a YOLO like life savings play, right? Because if you added more to these puts, if you lose all of this, like you're kind of wiped out financially, I feel like, or at least a good amount. So I'm just saying this to add a little bit more seriousness to the move that you're doing here. 5 minutes with Neil. Sup, brother? 5 minutes with Neil. I love that name. That's super dope. It's better to be short using puts. At least your maximum loss is capped. That is true. Whereas if you're actually short the market, your loss could quite literally be unlimited. Amit, will you do closing live stream this week? Lots of earnings. Not today. Today I'm going to be in New York, but probably the next couple of days, yes. Robinhood earnings are up. We talked about this on the markets on Finance Junkies yesterday. I'll probably post a clip of that podcast today. I'm interested in Robinhood earnings. I really love the stock. I mean, I really love the app, not the stock. The app is used to trade stocks. But we were trying to figure out if there was a moat yesterday, and we can't really figure out Robinhood's moat outside of the fact that it might be a little undervalued, given we're going into a bull market. They'll have more trading, which means more payment for order flow. And as a result of more payment for order flow, Citadel, the big guys are going to spend more money on their data. But in terms of a realistic moat, it's hard to kind of pinpoint Robinhood as having it. Now, they do have $6 billion in cash, and they have a $9 billion market cap. So I mean, their cash on hand to market like if to market cap is really nice. If you the nominal value of Robinhood is like $6-7 a share if you have to liquidate everything, which is not that far off from where they're at right now, which is indicating the kind of undervaluation, along with the fact that options and equities trading transaction volumes increased Q3 2022 in one of the worst recessions that we've had in probably a decade. Versus going down. Only crypto went down. So you could imagine in a bull market, it's just only going to go up, which means they're going to get more data. They're going to have to, their revenues theoretically should go up and they should hopefully trend towards profitability. But you never know, right? And so outside of that, there's not a real moat that we tried to come up with Robinhood outside of the fact that it might be a little undervalued. Palantir down 1.4% in the pre-market. SoFi down as well. Makes sense that a lot of these stocks are down. They had a phenomenal run. Tesla up in the pre-market at 193. Tesla with the growth deservedly should be up a little bit more than some of its peers. Spotify up 1.78%. We got Teladoc down. So most stocks down, some stocks up, but in general, definitely red from where we were on Friday. It's not a YOLO play. I'm not going all in. Relax. Okay. That's good. At least you're not all in. Shem Pasta, what's up? Marco, what's up? George, what's up? How's your guys' weekend? Did you guys have a good weekend? Ramu, Seth, Dex, hello. I hope you guys had a good weekend. I had again, I'll say interesting weekend. That was it was one of those weekends that was interesting to say the least, but it was interesting. Bitcoin at 22,828. Bitcoin off a little bit from its 24,000 highs just 4 days ago on February 2nd. Nasdaq below 12,000. Well, it looks like it's gonna open a little bit below 12,000 in the market open. Pre-market, it's still trending towards up 12,000. Again, this was at 12,200 on Friday, right? So this was like peak euphoria. It was up pretty nicely. S&P at 409. It was at 418. Look at this. I didn't even know it hit 418. I thought it hit 416 was the night. It hit 418 on February 2nd. Now we are down to 409, which is still insane to say we're in the 400s on the S&P. Like that's just, it's absolutely insane. Carvana down to only 2%. NEO down 2%. Ford is down. Ford was down 7% on Friday. It had a horrible earning. It's just like absolutely horrendous. But Ford has been stuck in this channel, from 10 to 13 for a pretty long time. Let's go to Enphase. Where's Enphase? Enphase probably what, 220? 224 pre-market, 0.5%. Snowflake, Darth Chris is out of Snowflake. We talked about it on the Palantir Weekly podcast. He thought the valuation got a little too rich, which makes sense. So he took some profits on Snowflake. And now it's at $159. We had a really good clip on the Palantir Weekly comparing Palantir to CRM, Salesforce. And Chris and Arnie did a great analysis just explaining kind of why the trajectory of Salesforce may be similar to Palantir, although Salesforce had to do multiple acquisitions to keep this rate of growth up, especially around this time when they bought Slack for $41 billion. I mean, they really had to do a lot of work to continue to grow. Whereas Palantir, you might imagine they're just able to grow and hit the S-curve without having to deal with buying too many other companies to prove it. A boss, that's funny. John, hello. One more week till Palantir earnings up. Next Friday will be our review of Palantir earnings, or preview of Palantir earnings. And then Monday on this channel, we will see, can Palantir hit 1.9 billion in revenue? That will be the question. We're looking for $503 million in revenue in Q4 2022 in order to determine if they can do it. And if they can, it'll be great. If they can't, then, we'll see what happens. Might be a buying opportunity. All right, here we go. It is February 6th, 2023. Still a long time to go in 2023. Brand new year, 1 month in. The stock market is now open. Wake your ass up. The stock market is open. ARK Innovation, $42, down 1.98%. Bed Bath & Beyond, up 4.10%. This company's supposed to go out of business, but the market does not care. Carvana down 3%. NASDAQ opening just below 12,000, 11,912. S&P at 410, going below 418. That it was highs on Friday. Spotify is up 123, 1.87. I guess the market likes increased subscriber growth with no profitability, but I guess that is what the market cares about. Snapchat at $10.91, down 0.89%. Netflix 365, 0.08% down. So Netflix relatively flat, holding on to its 100% gains from June 30th, 2022, holding strong there. Taiwan Semiconductors, $91. Enphase up 0.95% at 225. Salesforce at 168. Robinhood 1056. I don't think Robinhood earnings are today. I think it's tomorrow. Correct me if I'm wrong. There are a lot of companies reporting earnings this week, though, I believe, including Enphase. So there's still a ton of companies to watch out for. Amazon, we did a deep dive on them in our podcast yesterday. I'll probably post a clip of that today as well. Amazon now at $103.72. SoFi down 736. Palantir down 833. What else do we got? DoorDash at 58. Rumble at 992. This is the YouTube competitor. Let's look at Tesla. Tesla should be up nicely. Tesla 196. Up 3.43%. So market's relatively down. Some individual equities are up. Shopify is down. By the way, Kathy's been selling a decent amount of Shopify. Either she's rebalancing or she's lost conviction. I am skeptical she fully lost conviction, but I can't be completely out of the blue that she hasn't, because when she starts selling 80, 70,000, 200,000 shares at a time, she starts to signal a certain trend to the market. So let's hope that doesn't happen. Sachin says 8.5 to 8.10 is key support for Palantir 200-day moving average. Yeah, and I mean, look, I think a lot of people this time, if it's going to be harder for it to go below that, because now a lot of people want to buy the dip because they missed the run up. So if it gets down to the 8s, maybe even the 790s, I think more people will buy it than not, and we'll see where it goes from there. Get a better bell. This is such a good bell. This is not a bad bell. It's not a New York Stock Exchange bell, but it's still a good bell. Did you see a Jimmy Dore bid on Alex Carp? I didn't. Can you send that? I know Jimmy Dore. He's a comedian political analyst, so I'm sure it was funny, but I didn't see that. Amit, my lady's brother is a truck driver. The company he works for just laid off a bunch of drivers, including him. Their big client is Walmart. Daily deliveries are down 70%. Wow. That's a good piece of news. I mean, I was also going to mention this. I put it in the title, so let me bring it up now. Another company, look at this. It's a great bell. It's a terrible bell. Another company is doing layoffs, and that company is Dell. Dell is laying off 6,650 workers. The article is not loading right now. I'll give it a second, but Dell is laying off about 6.5% of its workforce, 5% of its workforce, which is interesting. Yeah, CNBC is like being weird. It's not working right now. But I mean, let's actually look at the market on Dell. So Dell announcing a 5% layoff. I mean, Dell is a pretty big company. Dell has been around for a while. Dell is, I wonder if these are, again, blue collar or white collar jobs that they're laying off. So Dell was 111 in 2021, and now it is about $40. So it's down pretty significantly since 32 on October 31st. So it's up a little bit since then. Does Dell have a dividend? Yeah, Dell has a 3.2% dividend. Okay. So for Dell to even get to $100 with that 3% dividend was amazing. I mean, that was peak euphoria 2021. Now it's come back down. Dell's market cap. Wow, Dell's market cap is just $29 billion. That's it. Wow. I mean, Dell isn't really a tech company, right? They're a hardware company that does some stuff in tech, but they mainly sell products. They don't really make operating systems, to my understanding. Wow, $29 billion. That's way lower than what I expected. Way lower than I expected. Bro, did you wire the interface? Chris, I ordered it. It's not here yet, but I did order. I ordered it on Saturday. So hopefully by Tuesday it'll be here. And even when it comes, I don't know if it's going to work. So hopefully it does work. Chris is talking about this new interface that I need to hook up to reduce some of the cackling on the mic. So let's see. Hopefully that'll happen. Dell's a low margin hardware company. Yeah, that's $29 billion for Dell. I did not expect that for Dell. I thought Dell would be a little bit bigger, just because Dell is like an iconic company. Like, we've seen them for so long. Okay, interesting. Let's listen to the White House economic advisor saying that inflation's coming down. Now, just remember, obviously they want inflation to come down because it's great for Biden, but it also signals the fact that inflation, might actually be coming down.
Attention turning right now back to the strength of the economy and the Fed's path for rate hikes after Friday's jobs report shocker. Employers added more than 500,000 jobs last month. was more than double the expectation. To talk more about the report and the economy, I want to welcome Council of Economic Advisors member Heather Boucher. Good morning to you. We've been having a sort of a wild debate here on the set this morning about the impact of those jobs numbers on Friday and what the Fed should or should not do about it, what they will do about it, what the bond market is saying they are going to do about it. There's no question it's good news in many ways. The question is whether the White House should take credit for that, given the sort of cross currents of what's happened over the last 2 years.
Well, certainly, I do believe that the president deserves a lot of credit for the strength of this economy. I mean, when he came into office, his number one priority was to get the pandemic in check, get those vaccines out there, get the economy back on track, took big, bold steps to do that, got people back to work. And, you know, throughout the past couple of years, we've seen this economy be able to weather a series of crises thrown at it, different variants of the pandemic, different supply chain challenges as businesses struggled to get up and running after the pandemic had happened. And of course, the unprovoked war in the Ukraine that has upended global energy prices. And yet we have been able to see this kind of strong, steady job growth and growth overall. And, you know, of course, we have seen that prices have been high, but those numbers have been trending downwards. And so I think this is the strength of the U.S. economy. This is what the president means when he says he's going to build an economy from the bottom up and middle out.
I know you probably can't tell us exactly what you think about this, but there's a huge question now about what the Federal Reserve is going to do. Jay Powell has been pretty public about his views that the employment picture is probably too strong in his mind. And therefore, the question is.
Now, this is important because Jay Powell doesn't like that employment is too high. We added 400,000 more jobs than were expected on Friday. But obviously, the government wants the lowest unemployment rate because they want people employed. So, you know, the little tension that causes, it'll be interesting to see how they answer it.
Is whether he's going to continue to raise interest rates and whether he should.
Well, as you know, Andrew, we can't comment on Fed policy, but you know what we do see in the data is that the signs of inflation pressures are easing. So in the latest data on prices, we've seen that the annual rate of inflation has been falling for the past 6 months. That's moving in the right direction. And on Friday's report on jobs, while we did see wages tick up, that pace again is slowing relative to the past 6 months. You're seeing a downward trend there, even as things are rising. So that means that you're not seeing pressure coming from the labor market, from wage gains on inflation at this point. So, you know, we're recovering from a global pandemic. And it's challenging. And you see these repeated, challenges with businesses.
Okay, so ultimately her point is that, look, inflation is coming down, and if inflation is coming down, we're going to be in a good situation. Now, we have Mohammed El here, and before I get to him, I want to talk a little bit about this Chinese balloon, because this is also very interesting. So for those that don't know, apparently there was a Chinese balloon that was flying over the United States, over Montana, ironically, where our nuclear weapons are at. That was one of the 3 spots where our nuclear weapons are at. And the Chinese just said, look, we didn't mean to have this balloon fly over you. This balloon is 3 buses in the sky combined, right? So this is it's not just like a little play balloon. It's a very big balloon. It's powered by solar panels, has a lot of technology, and it has a ton of different cameras. At first, the Biden administration said, hey, we're not going to shoot it down. We don't want to be adversarial. We don't want anything bad to happen to the balloon, right? So the balloon's going to stay where it is. But now we've gotten to the point where just yesterday morning, we shot it down. So the United States took a couple $1 million missile and just shot it out of the sky. Maybe it was a little bit too expensive of a missile to shoot it out the sky, but it was at 60,000 feet, as you can see in this picture, and the average commercial flight flies at around 35,000 feet. So it was way, way, way high up in the atmosphere, but it obviously had cameras that were able to track what was going on. And so I think the question becomes, if the US had a balloon that was sent to China either by purpose or by mistake, and obviously we would have claimed it was by mistake, would the Chinese have shot it down? More likely than not, China would have shot it down, right? And so it's funny because we have TikTok that's installed on millions of devices that are basically these little balloons on everyone's phone, and we don't care about that. And granted, I'm not saying we should necessarily get rid of it. It's just so ironic how funny it is. But a Chinese balloon, we're able to shoot it down. I did like that we didn't shoot it down for the first couple hours because we didn't want to increase tensions. But it seems like when the balloon wasn't going away, right? If the balloon's just going to stay there, it's like someone's in your house. They're not supposed to be there. And they're not leaving. And you have a gun. And you're like, hey, well, you got to leave. And they're just like, oh, I'm just here by mistake. At some level, you have to look at national security. So that was an interesting that happened. I wonder what that's going to implicate U.S.-Chinese tensions and relations over the next couple of months. China, there was some unofficial statement by some website saying that they are planning to invade Taiwan by 2027, or at least that's what Xi Jinping told one of his military generals. I can't say that wouldn't happen, and I can't say we can be skeptical of that happening because Russia invaded Ukraine. I mean, like, if anything, that's the precedent has been set that dictatorial regimes do not trust national sovereignty, and they will do whatever it takes to claim their power. And unfortunately, China is a little bit more powerful than Russia. All right, let's take a look at what Mohammed El-Erian has to say about investors and uncertainty.
For more on the markets is Mohammed El-Erian, Allianz and Gramercy advisor and president of Queen's College, Cambridge. And Mohammed, looking at what Larry Summers had to say earlier, he said that this may be the most complicated economy he's ever had to try and read. Where do you come down on that? The jobs number on Friday really surprised a lot of people.
So he's absolutely right. And something that we have discussed on many Mondays is that we have significant uncertainty on three key issues. One is the way the economy functions. We can talk and defend many different outlooks for the real economy over the course of the year. Two, inflation. I can think of three possible scenarios for inflation. And then finally, policy and the disagreement between the markets and the Fed. So there is an unusual level of uncertainty, and then it feeds on to the structural uncertainty we've been talking about. The energy transition, the rewiring of supply chains, the change in globalization. So I completely agree with Larry. It is a very difficult economy to read, and we have to get our head around the notion that there are many potential outcomes, and no one can convince you with a high level of conviction and foundation that one will prevail. We just don't know, Becky.
So what do you do? Where are you going to throw your hat?
So first, if you're a portfolio manager, and it goes back to something you discussed in the 7 o'clock hour, you think a lot more about the tails. You don't ignore the tails as thin and very unlikely. You think a lot more about the tail. You don't just position yourself for the baseline because the baseline is less probable. As an economist, you take a lot of time going through the data in major details, because that is what's going to show you. I think the service sector is probably the most important sector to understand today.
Okay. In terms of what you think the Fed is going to do, how much more complicated did it just get? I mean, Jay Powell was sounding a little dovish last week before we got these jobs numbers, but you look at the jobs number, my guess is they're game on again in terms of higher rates.
Yeah, he said disinflation 11 times during the press conference, 11 times. That word wasn't mentioned a single time by the ECB president or the governor of the Bank of England, who spoke the following day. And he gave the market the perception of a hard turn towards soft landing, and then we got the Friday report. So he's going to have to decide whether he wants to clarify tomorrow where he sees things going. Look, you know that I would have preferred that they do 50 basis points and then wait and see. They didn't. I suspect we have 2 more 25 basis points ahead of us. And my major concern is the possibility that they end up hiking into a weakening economy. The economy is very strong now, and that's why you wanted to get the hikes out of the way. I worry that we may end up hiking into a weakening economy, and that would be unfortunate.
Where is the economy showing signs of cracking? Where does it happen, and when does it happen?
So the forward-looking indicators are the reason why some people, not me, some people predict a recession with 100% probability. I'm not there, you know that. I've said it over and over again. There is nothing predestined about a recession. But if you look at a small set of forward indicators, the forward indicators themselves, the leading indicators themselves, the PMIs, manufacturing in particular, the layoffs that we're hearing of, you can make a case for a significant slowdown. That is what people are looking at. But you can't deny the strength of the labor market. And that's why people like me say, you know what, it's not a done deal by any measure that we'll end up in a recession.
So Mohamed El-Erian makes a good point. He wanted to see 50 basis points by the Fed and then wait and see what happens. Because theoretically, if you did 50, that would tighten the economy to a stronger extent than it has currently been tightened. And then you could wait and see what happens with the results, whether it's unemployment numbers or inflation or jobs, whatever it may be. Tesla up another 3.3%, inching towards 200. But they did 25 because they wanted to be more conservative and they didn't want to overly tight the economy, which is just weird because their entire point has been they're not cutting rates for another year, which is hard to believe. So it's kind of weird that they didn't do 50, which is why I expected 50. I was just like, all right, they're just going to rip the Band-Aid off and then they'll start doing the 25s. But they did 25 first and the market reacted very positively towards it. The problem is the market has now baked that in. So, I mean, you're going to need to see a lot of momentum to keep that up. Meta at 190 doing phenomenally well, up 1.92%. Meta has been the only big tech stock that really proved either there's two scenarios to think about Meta. Either it got so undervalued at $88 that it became a joke, which, yeah, or it really proved to analysts that they are the only advertising business in town that honestly has no disruption set for it. Because I would argue Google could be way more disrupted than Meta. Again, remember this kind of core thesis when you're thinking about Google versus Meta. Let's just say ChatGPT or search or even Google's own product comes out that destroys its advertising business in search. And let's just say that has a negative impact on its revenue. Facebook is not a search engine. Facebook is a content platform. And as a result of, and Instagram as well, and even WhatsApp too, because content are the messages. And as a result, when you place ads in between content, it's way easier to click on an ad, consume an ad, understand an ad, buy something from an ad versus search for something and then have to click based on that search result, which is Google's business. Now, because search has had no challenge for the better part of 2 decades, it's been a phenomenal business. But if search has a challenge, Facebook's not a search engine. Facebook is a content play. And that's why Facebook is incredibly interesting. And so Facebook's performed better than every big tech stock. Granted, it was down significantly, but still it's done better than Apple, Amazon, all of them. Glitch Life closed the last of their puts today. Wow. Glitch, did you close those at a loss? Or I would assume it's at a loss, but let me know if it's at a loss. It's funny because Gabe doubled down on his puts. so you went from bearish to bullish. Gabe went bearish to more bearish. Amit, what do you think about you? So I've answered Nubank. I've talked about it before. I haven't done that much research. I do think the market cap is a bit expensive at 22 billion. Now, granted, they are growing really quickly, especially in the Latin America region. So I wouldn't put it against Nubank to justify some of that market cap. I just don't know that much about them to be like, this is like a great buy, in my opinion. Obviously, I'm more biased towards SoFi. I think it has a little bit more potential. Galileo, right? There's just so many things in SoFi that make me more excited about it. But Nubank's still a cool company. I just don't know that much about it. I do know they're growing a lot. No, I made bank. Okay, good. Not bad. That's good. You made some bank rather than having to become bankrupt. Ads for Amazon. Amazon is eating away at the ads business too. Now, granted, I don't think Amazon is eating away at Facebook ads. I mean, Amazon did 40 billion a year in ads. Facebook did about 125 billion. The interesting thing about Amazon ads is like Amazon is a search engine within itself that doesn't require crawling the web. And so that's the beauty of a centralized platform. Google needs to crawl the web and then use advertising within clicks in the search, right? Amazon, all the products that you would click on are on Amazon.com. They're not on 17,000 different websites that then needs to be indexed because Amazon's not a decentralized platform. It's same thing with YouTube, right? Like the reason YouTube works and a lot of podcast search engines don't work is because podcasts are scraping open source RSS feeds to try to give you a search result, which is why searching for podcasts sucks. YouTube has all the videos on the website. So you search it and it just pops up the video. And then boom, if you click it and it was, it had an ad in front of it or it was sponsored, the company makes money. Amazon the same way. They don't need to do anything other than the fact that they just show you the videos. And Chris mentioned on our live stream yesterday, advertising is one of the best businesses ever because there's no overhead costs. You have inventory. People pay to show up in that inventory. You show up. All you have to make sure is the traffic is there to justify the cost. And then boom, you're in business. They did $10.86 billion versus analyst expectations of 10.3. So it was a great quarter for Amazon in terms of their their money. Gabe is not an idiot. He's my bear guru. When I want to short the market, I look to Gabe as my spirit animal, made me take quite a bit of risk. Okay, understood. Amazon is eating more of Google ads. Absolutely. I would say more of Google ads than Facebook ads for sure. I did not go from bearish to bullish. I'm still bearish, but the put call ratio for the next 2 months is nuts, and that makes it much less likely to crash when everyone sees it. Okay, understood. Understood. Likely 60 to 70 billion by 2025. Yeah, that would make sense for Amazon. What's up about C3 AI? So the reason C3 AI we've hypothesized is up is because their ticker symbol is AI. Like they're up 17%. Like it's just, there is nothing fundamental happening with this company at all. Find me something that happened. I think they got like a $900 million governmental contract. That's nothing, right? That's what, over a couple of years. Like that's not even a lot of revenue per year. It's just, they have AI as their ticker symbol. And that's not it's not good for a company to run up like that just because they have AI, because eventually it'll come crashing down and people are going to lose money. But AI is not this is, I think, a Wall Street Bets kind of community took this stock over and said, hey, AI is the new thing. We're going to send this stock. I mean, it was $10 on January 31st. Now it's at 30. Can you tell me what justifies a tripling of their market cap? Because I don't, there's nothing really there. The CEO of C3 is also interesting. He said, if you work for Facebook, you should slit your throat. Like he does not like Facebook at all. Which is so interesting, because you would argue that Facebook's actually using AI in a more ethical way than not. But nonetheless, I don't think AI is meant to be as strong as it is doing right now stock-wise. Let me pull up this chart that Chris sent in the chat. By the way, thank you 302 people for being here. Means the world to me. Thank you all for being here. Please make sure to like the stream a little bit. It helps with the algo, because, YouTube needs the likes, because their algo cares about the likes. So if you can like the stream, that would mean a lot. Let's look at this chart right here. Google versus Amazon advertising. Dartons, thank you for being here. By the way, Christian Darnton has a announcement coming out. I saw on Twitter, I think this Friday. So I am very excited about your announcement, Christian. I'm looking forward to it. So look at this. Amazon challenges ad duopoly. Top 5 companies by estimated share of U.S. digital advertising revenue, 2018, 2019. So as you can see, Google, 2018, 2019, 38, 37%. Facebook, 21, 22%. Microsoft, Verizon. Verizon actually bought a lot of, Verizon bought Yahoo. They bought AOL. So that's why Verizon's up there. Yahoo and AOL still reach billions of people every day. So that's why Verizon's up there. But then you have Microsoft and Amazon. So Amazon was third. U.S. digital ad spend in 2019 was $129 billion. I believe that's close to like $200 billion now. This is Amazon ad inventory. As you can see, you search for something, boom, Adidas shoes pop up. There you go. This is Google. You search for Adidas. These are Adidas ads right here. And so Amazon advertising has higher sales, higher bestseller rank, higher organic ranking, higher reach. The click-through rate is more stronger because the intent by which you're searching for something is way more deeper than on Google. Because on Amazon, you're searching to buy. Google, you're searching to see. And so that is sort of like a fundamental difference with Amazon versus Google ads. And, one could argue, if search gets messed up, if ChatGPT really takes things over and it forces Google to gut their search business because they have to compete with ChatGPT, then Amazon takes away a lot of that traffic. And that's the important thing. Thoughts on trade decks, since we are talking about marketing. I have not looked into TTD in the longest time. I have heard from people that I've talked to about a couple months ago that this is the best advertising technology company on the planet. That's what I've heard. I have not done a deep dive into them, so I can't convey that. It has a $26 billion market cap. At one point, it was $114 in 2021, reached low of 39. Now it's at 52. I don't fully understand their moat. I do know that they do cross-referencing and cross-selling based on targeting. ADTH, Adherent, is a SPAC Palantir invested in that was also in the digital ads business. But the trade desk works with pretty much everyone. I mean, they work with Roku, they work with Netflix, they work with a lot of big guys. I think it's worth a deep dive. It's definitely worth a deep dive, especially if we see the ad markets becoming more consolidated with the disruption that's happening in advertising in relation to search. It might be worthwhile to look at trade desks. Remember, Google and Facebook are the only companies in the world that really have a solid monopoly on ads. Obviously, Amazon is getting up there, but it's Google and Facebook. So until someone disrupts the fundamental way of how people find new products, which is scrolling through Google and Facebook, it's going to be like that. Before it used to be the radio, then it used to be TV, and TV had its golden era for, I would say, 40 years. And then we realized instead of, having network television shows, what if we have individual people like me that start a channel, and, there's hundreds of millions of people like me on these platforms that will create content, and advertising can go there instead. And so, I mean, it's just, it's hard to see that's why all the Web3 crypto folks were like, oh, we're going to decentralize Google. We're going to decentralize Meta, and it's going to be on distributed servers, and there's going to be a coin. It's like, shut the hell. It's like, that was never going to happen ever. And I felt, it was crazy because I felt like I was so skeptical about it. And I felt like I was the idiot because all these podcasts where all these thought leaders came out and they're like, no, Meta's, going to be decentralized, all this stuff. There's going to be NFT. And then you just realize, wait a second, this doesn't make any sense. It just doesn't make sense. That's not going to happen. And so when you put some logic there, you're like, oh, wait, like there's actually these monopolies are not going anywhere. What about apps? They're similar to TTD. Yes, they are. Again, I don't know enough about apps. I've heard about them. They are, I think, cheaper than TTD. So I'll be happy to do a deep dive into both of those. But apps is also a company like that. Thought leaders grows. I mean, bro, every thought leader was saying, like, you got Tim Ferriss, you got Naval Ravikant, you got all these like really influential people saying that Facebook and Google are done because crypto is going to decentralize everything. And I remember I would come home from work like October 2021. I was listening to these podcasts and I was like, this just doesn't, these are such smart people, but this argument makes no sense. But they just kept saying it over and over and over again. And now all those Web3 crypto folks have gone away because AI is the new thing, because AI is everything. It's the chain of disruption switched so quickly from crypto to AI, and AI probably has a better chance of disrupting, even if the disruption is going to be minimal because there's so many startups that aren't really AI. They're just saying they're AI startups. But the Web3 stuff, in my opinion, was never gonna do anything. Oh, we have new news on Palantir NHS. Do we have new news? Hold on, let me go to Twitter. It would probably be on Twitter if we get some news. Darnton, if you have a link, send it to me for sure. I would love to see that. He tweeted, potential suppliers of the new system have questioned whether Palantir is an unfair advantage in the competition. Palantir's, okay, so I'm assuming there's an article that came out that are questioning if Palantir should be able to get the NHS's contract because they have an unfair advantage. Well, they do have an unfair advantage. Their tech is better than everybody. Okay, so no news on the NHS deal yet, but maybe some more propaganda coming out in the UK saying Palantir isn't. Look, at the end of the day, do they want to get the job done or not? That's the question we have to ask for Palantir, for the NHS. And if they want to get the job done, you go with Palantir. If you want to have a crappy medical care system, then go with all these other alternatives. But if I was Palantir, I'd be like, look, guys, it's at this point, it's either you want to date us or you don't want to date us. And if you're going to date us, you're going to have a hell of a night. But if not, you're not going to get there. Blockchain was just too early. It's going to be more prevalent in the distant future. I think blockchain will be prevalent. I think the idea that crypto decentralized kind of coin-based economic systems are not going to be relevant at all. I personally don't think they're going to be that exciting. Okay, Christian just tagged me in. $480 million NHS data platform will replicate Palantir dashboards. Interesting. Okay, I'll probably do a video on this article. We'll go deeper into that. Well, overall, we know that the NHS is struggling to just give it to Palantir because they don't want to seem biased, but I guess that's the problem. So the article is that Palantir is too good at fixing the problem, so they should not get the contract. Yes. That's basically what the article is saying. UK politics sucks. They don't work on logic. Let's see, man. This is a big deal for Karp. If Karp can pull this NHS deal off, because it's not going to be easy. He's dealing with a lot of political pressure, even though they've proven they can reduce backlogs, they can reduce wait times. Like Karp and company have produced results for the UK, especially during the vaccine era and just in the Chelsea and Westminster hospitals. Even the UK Prime Minister was talking about Palantir publicly. If they don't get this deal, I don't think it's Palantir's fault. I really think it's internal UK politics. But if they somehow figure out how to land this deal or a decent part of this deal, I'll have to tip my hat to Karp because that's a good one. That is a good deal to get. Okay. That's pretty much it. Thank you, everybody, for being with me. February 6th, 2023. I appreciate all 319 people of you being here. A couple more videos coming out today. Please check out my startup, link in the description. Definitely sign up. Check out some different stuff. We're rolling out an update in the next week and a half. So I hope you guys enjoy it. More stuff will be coming out on that soon. And yeah, that's pretty much it. Thank you all for being here. Have a great day. Great Monday morning. Let's kill this week. I will see you guys tomorrow in the market open. And I'll see you guys in a couple of little different videos later today. Good night, everybody. Or good morning, but I'll see you later in the night. Bye.